If you're trading gold in 2024, here are 5 essential tips to help you become a better, more profitable gold trader. Regardless of whether you have been trading gold for 10 days or 10 years, I'm confident that you'll learn something new. However, be sure to watch this video to the end, as the final tip reveals a simple yet effective gold trading strategy that you can start using right away. It's amazing to me that everyone loves to invest, buy, and trade gold because unlike stocks, gold has no cash flow, dividends, or interest rate, yet everyone loves it for the volatility, safety, and history. Even if it'll be guns, food and water, and land that will determine who survives the apocalypse. Everyone loves to trade gold because it moves, and it moves more in percentage terms than many other instruments. If you're trading gold, here are the tips that you need to know for 2024. Number 1, we know this year will be the year of interest rate cuts for the Federal Reserve and many other central banks. But did you know that the interest rate cuts are very good for gold? Take a look at this chart. Gold is the yellow line and the blue line is the Fed funds rate. When the Fed cuts interest rates, it can lead to a massive gold market rally. As you can see in the chart, gold begins to rally before the Federal Reserve lowers interest rates, but the big move happens when the cuts actually begin. So while gold hit a record high in December of last year, the rally could just be beginning. This leads us to tip number 2. Gold has an inverse, which means an opposite relationship with US Treasury yields. So when Treasury yields rise, gold falls. And when Treasury yields fall, gold tends to rally, as you can see here. This is no surprise given the relationship between the Fed fund futures and gold that we just talked about. But this relationship can also help you avoid losses, which is very, very profitable or very, very valuable as a trader. As a gold trader, you should always be watching Treasury yields. It will keep you out of bad trades and support you to take the good ones. The best way to think about it is if US yields are up 1% or more, do not buy gold. If US yields are down 1% or more, do not sell gold. Instead, you want to be looking to buy gold when US yields are down and sell gold when yields are up. Now, you may be wondering, why does gold track interest rates? The answer is quite simple. The level of interest rates is determined by how well an economy is doing, right? So whether growth or inflation are too high or too low determines how central banks set interest rates. And surprise, surprise, gold is affected by the very same things. Tip number 3. If you're trading gold, you should also be watching the euro-dollar currency pair. If your chart setup is telling you to buy gold and euro-dollar is collapsing, take a smaller position, or better yet, pass on the trade completely. If your chart setup is telling you to sell gold, a rising euro-dollar should strengthen your confidence in the trade. This daily chart shows how tightly euro-dollar and gold move together. And if you look very closely, you can see the blue line, which is euro, will oftentimes move before the yellow line, which is gold. This relationship works on a shorter term basis as well. Take a look at this 1-hour chart, which shows euro and gold and how they're mirror images of each other, with the euro, the blue line, often leading the move in the yellow line, gold. So if euro is falling quickly, chances are gold is going to follow suit. If your chart setup is telling you to sell gold and euro is falling, take the trade. But if your chart setup is telling you to pick a bottom in gold and euro is falling, maybe you should think twice about taking that trade because the bottom could actually be broken rather than held. It is important to understand that gold is correlated to euro-dollar because gold is priced in US dollars, and both the value of the euro-dollar currency and gold is determined by the US dollar's value and moves. Now, there will always be periods where the relationship breaks. Nothing works 100% of the time. But if you want to be a good trader, you need to select the highest accuracy trades, and taking the cues from euro or US Treasury yields will help you achieve that. Don't forget, I'll be revealing a simple, effective gold trading strategy at the end of this video. I hope you're learning that there's more to trading than looking at charts. Check out the link in the description if you want to learn how to trade with fundamentals. Now, tip number 4. 3 things could drive gold prices higher in 2024. Recession, fresh geopolitical risks, and the return of inflation. Recession is actually very good for gold. And the last 3 US rate cut cycles either preceded or coincided with recessions, as you can see in this chart. This chart says recessions always occur after the Fed starts easing. I'm not convinced that there will be a deep US recession, but anything can happen, right? Even if there isn't a recession or a deep one, the turmoil in the Middle East could escalate. We could see more Chinese posturing towards Taiwan, and inflation could start rising again, all of which is good for gold. You made it to my very last trading tip, congrats, which is a very, very simple trading strategy that I hope you will enjoy. This trading strategy will help you identify some big moves in gold just as they are happening, and hopefully help you ride the moves for some good profits. So let's go ahead and get started at looking at the strategy. So right now you're looking at my gold chart. And in this gold chart, we are going to lay on two indicators. The first indicator, simple moving average, we're going to set it to the 10 moving average, which we are going to make our red line. And then we are going to add another moving average, and you can just copy and paste it. And this is going to be our blue line, and it's the length is going to be 50. And we're looking at a daily chart of the gold price. So the rule of the strategy is very, very simple. All you want to do is you want to look for what we call the moving average cross, where the 10 simple moving average crosses above the 50 moving average, or the 10 moving average crosses below the 50 moving average. So let's take a look at some of the examples that you would have, or some of the trades you have taken based upon this setup. So right here on this candles, when we have the most recent 10, which is the red line SMA, crossing above the 50 SMA. So at this point, the market closes here. And so the market closes right here, and you would have gone long gold at 1974. So 1974, that means that your target is 1989 and your stop is 1959. So you can see it rallies, and the high in this one is actually in 1997. So the very next day, your profit target is hit. And at this point, you could trail your stop. You could trail it by the 10 SMA if you like, or you can go for 2 times risk. This one went well above $2,000 to almost 2010. So one winning trade. Here's another cross, and this is a short trade in gold. In this case, the 10 SMA is crossing below the 50 SMA. So the red line is crossing below the blue line. So we go short here at 1925. It doesn't retrace at all, so we don't have to worry about, the precise stop level, but that'd be 1940. Our target, on the other hand, is 1910 for the first level. And you can see it takes a little bit of longer time than the other trade, but pretty much right over here is where the profit target was hit. So right at this candle is where your profit target is hit, and you could have trailed your stop maybe on a move back above the 10 SMA. You would have exited your second halving position pretty much at the same level. So one winner, two winner. Here, this one, I don't even need to run through the numbers here, but this one is a loser. And that's okay. Not every single trading strategy is going to work 100% of the time. Here is the next short trade. So we go short here, 1974, doesn't really retrace at all. 1974, that would put your profit target at about 1959. And so pretty much the next day, the profit target gets hit right over here. And, you could have squeezed it for more of the position. You went 2 times risk, or you could trail your stop. 2 times risk generally works a lot better. Here is another trade where we have the cross right over here. I'm going to bump this up. We go long at 1988. So your profit target should be about 2003, I believe, 2003. And then the next day, profit target is hit. The high is 2009 here. So we have 1, 2, 3, 4, 5 trades, 4 of which are winners so far. And here's another one. Here we cross right over here, close at 1836, as our profit target is at 1821. And then pretty much the next day it gets hit. So 5 out of 6 winners, those are the kind of odds that I want to see with any type of trading strategy. As I said, no trading strategy works 100% of the time, but 5 out of 6 winners are pretty good odds. And that's what this very, very simple, easy to use strategy has given us in the most recent trades. Now, some of you may say, that's great, Kathy. I love the strategy. If you trade gold and you trade gold well, and you're in the market for a futures prop trading account, check out the big discount code that we have in the description below, because you can use gold to earn a funded traded account. If you are looking for a shorter term strategy to trade gold, let me show you what I use. So for those of you that are looking to trade gold on a shorter term basis, what I use is my zip indicator. This zip indicator is available to all BkTraders, and it's very simple to use. Let's take a look at it. So right now you're looking at my zip chart. And what's really beautiful about zip is that the chart basically at one glance helps you understand what the short term and the longer term trend is. And we use zip on 1 hour charts. So you can see here in the most recent price action, gold, the background is green, and the gold is trading above the indicator line, which is the short-term trend. And so that means that the short and long-term trend is bullish gold. But here we have the background red, and most of the price is below the indicator line, which means that the long and short-term trend is bearish gold. So you want to look for opportunities to sell gold in this zone. Now, the trade setups we have is when we have a white candle with either a red or green background. In this case, we have a white candle with a red background. So that means that gold has fallen below the indicator line and the longer term trend is bearish. So you sell gold here. So we sell gold at $20.69, $5 target, $10 stop on the first half of the position, and then you can trail your position on the second half, maybe go for $15, $20 target. So here we have gold triggering a sell signal at $20.69. So our first target is going to be $20.64. Can't be greedy because we're trading 1 hour charts, whereas the previous strategy that I really love trades daily charts, so you can go for a bigger $15 target. But here, $20.69, our target is $20.64. So it gets hit actually relatively quickly over here. And then you trail your stop. You can trail your stop by the line or whatever you want. In this case, you probably would have been stopped out if you trailed your stop by the indicator line. However, we have a new fresh sell signal here. So you have new fresh sell signal, $20.59, and then you can see that it does go a little bit above, retraces against you, $20.67, but not, enough to stop you out. And here, this becomes a very, very big trade where you would have hit your first target somewhere around here, and you would have hit your second target as well, because your first target would have been $20.54, which would have been hit over here. And then if you had a $15 second target, that would have been $20.44, and that would have been hit over here. So first and second target was hit. So winning trade here, winning trade here. This one, you would have gone long at $20.74, and unfortunately not enough juice. Just missed your target by a little bit, but that's okay. 2 winners, 1 losers, that's not too bad. And the next time we have a setup is over here, where we go long here at $20.35. 45 is our target, so we're still holding our position, still holding it. We actually get triple zip, which I love to see, and boom, this becomes a really, really big move higher. Here's more winning trades, and you can see it works very, very well. Here's another beautiful setup here in gold. This one would have been, this one 1982. This would have been a loser, but you lose a little and you win a lot. And the odds are still very, very good for gold using the zip trading strategy, and you can catch some really big moves. So this is a way to trade gold on a shorter term basis using 1 hour charts with more frequent trades than the previous setup using daily charts. I just shared with you 5 essential gold trading tips. Now, all I ask in return is that you take 2 minutes of your time and like this video. And if you want to stay on top of my future trading strategies and tips, make sure you subscribe to the channel. And if you want to trade with me, there's a special discount link in the description below. Don't miss our next trading video. See you next time.